So one of the interesting things is when you are a business owner, you're responsible for making a lot of decisions, and some of them seem kind of very in the moment and pressing, and some of them you make, or maybe you made years ago, maybe are or were not the right decision, and maybe you haven't really thought about it since. Or possibly you're looking to get started and you want to make sure you have certain ducks in a row. So, to talk about some things when it comes to your formation of an entity, which is a thing a lot of people, kind of think about and check a box and move on. But there are some things to think about. So, I'm very curious about this conversation with Scott Letourneau from Nevada Corporate Planners. Did I say that right?
Yeah, perfect, Kevin.
All right, good deal. Well, nice to have you, Scott.
Yeah, thank you. It's a pleasure to be here. It's the foundation of a business is an important subject, and as you mentioned, some people kind of my language whiz right past this step and on to the exciting parts of business. But we want to make sure that for some of you just starting or have had a business for years, it'll be good to take a look at the foundation so you're protected properly moving forward.
Gotcha. Exactly. Because what it comes down to is you don't want to just say, "Oh yeah, I've got a business, whatever," and then you realize like, "Oh wait, didn't follow the practices, or something wasn't set up right, or just wasn't meeting the expectations of what it needed to." So I think sometimes it's just good to revisit. So that's why I'm excited for both people that are more in the new phase, or just people that just it's good to go to the doctor, get a physical,
Not
sometimes, and just,
a bad
or have the
idea.
dentist check your teeth, even if there's nothing wrong, you just hope that it stays that way. And so
Sure,
sometimes it's good
exactly.
to
Yes.
double check things because, maybe 20 years ago, everything was fine, but things might have changed. So, all right. So just to get it out there, you're from Nevada Corporate Planners, but you're in Nevada. So you're in the Vegas area, correct?
Yeah, in Las Vegas, moved here 29 years ago. Been in business 25 years. Just had my 26th wedding anniversary. So I'd like to
Oh,
say
congratulations.
I've beaten the odds in each category, Kevin.
There you
Married
go.
first time and business first time. So very, very fortunate. But yes, so been here for many years.
Well, big milestones there. Now, although you're in Nevada, you're not just serving people in Nevada, you're serving people really across the world, and not just with setting up entities in the state of Nevada, right?
Yeah, correct. We incorporate in all 50 states. We have partners in other states, and we have a lot of international clients. Um, Back when we started, there was a lot of companies promoting tax-free Nevada, just like you hear Wyoming now, and there's differences how it applies to U.S. versus non-U.S. residents. And I did a lot of research and hired some of the best people to figure out what works and what really doesn't work because there's a lot of, like any subject, there's a lot of misinformation out there.
Gotcha. And I hear stories, and I've ever partaked in anything, but I've heard stories of like people go on like cruises where they go, out into international waters so that they can talk about certain things. I'm like, just because you're talking about international waters, maybe it's not doesn't make it kosher, so to speak. But
Yeah.
out of curiosity, how did you get into corporate formation as a
So
business?
I graduated with a business finance degree, and back in 1989, Minnesota Duluth, and I remember in college, I we set up our first limited partnership with four buddies in an investment club. We were trading stock options in
Mm.
college and had business cards to trade stock options, and so I really enjoyed finance and had a Series 7 license, so got in that industry about companies and capitalization and growth type companies. And I had a friend who was in the incorporating business, and he said, "Why don't you come out and work with me?" And really, had a cursory idea of what that was from certainly companies and structures and public companies, of course.
Mhm.
And long story short, worked at this company and like probably a lot of good employees kind of listened to what was being taught and delegated. And I was one of these types that didn't always believe everything I read, and I kind of would start researching the things my company was telling me that was accurate. And the old you know, when you hear something, you go, it's like, this sounds too good to be true, because if it was this easy, everybody would be doing it this way. So there must be exceptions, and you know, there's always a sales push at some companies versus the whole story. And I felt really uncomfortable. Long story short, the more research I did, the more I found my company was a little bit more aggressive than I certainly felt comfortable with, like you mentioned, offshore cruises and stuff like that. And so, and of course, these are things you learn in business. I thought I was a partner. I never had anything in writing. You know, some of us have probably been through that experience with folks, and long story short, left, formed my own company, and I needed the right answers. So I asked this question, Kevin, like, who do you go to get better quality answers to questions? Because most people in business, they're really asking the wrong question, but they're getting the right answer to the wrong question, and they think they're on the right path, and they're still not, because they didn't ask the right question. So I wanted to go to, well, who would be a high level person or company in this area? So I went to Deloitte and Touche at the time, back in 98, 99, and worked on the multi-state taxation rules for, can you incorporate Nevada, foreign register, Wyoming, Delaware, all these kind of things you hear about. And in fact, just about a year ago, that connection helped me get into the Amazon tax department. I had a question about the 18-month inventory issue with Amazon, and I was referred, and they wouldn't respond to me. And I noticed the guy worked at Deloitte, and I mentioned, oh, I used to work with Michael Dunius at Deloitte. I got an email in 30 minutes saying, I apologize for not responding.
Oh, you know someone I know. No, I can't just
Oh, yeah,
ignore
exactly.
you.
So I had an emergency meeting, and like the next day at Amazon, to get
Oh,
my
wow.
answer on this tax issue. And so I knew going to the highest, and I spent $600 an hour back then, back in 98, 99. So that's kind of how I got into this, and I started. And early on, there was so many companies promoting the same subject, which happens in a lot of areas. And I just kind of said, wait a minute, there's a few things that don't work here that you should be aware about, and I can help you navigate this path properly. So that's kind of how I got into this, and it evolved by just getting deeper into it, and it becomes a little bit of a rabbit hole once you start talking to different accountants and attorneys. As we talked prior, you start to get little different answers, but that started this whole pathway.
Yeah, and what's interesting is you and I got connected from my insurance agent, who was actually a recent guest on the podcast a few weeks ago, Matt Lavelle from Well Insurance, and he's
Yes.
been writing my policies for I think about 5 years now. And in fact, I have a renewal that just happened. So,
Yeah, Matt's the best. Yeah.
Matt's an awesome guy. So, you need insurance, definitely contact Matt. Now, the thing I will say is everyone has a little bit of a different perspective you talk to,
Sure.
because we're
Yeah.
all looking at it from a certain angle. You're looking at it from a formation angle. Somebody might be looking at it from, legal liability angle. Someone might from like an insurance liability. Someone else might be looking from a sales tax. So you're going to get all this advice in business, and I'm sure everyone who's been in business for more than 5 minutes starts to realize this. That, as we were joking before we hit the record button, you had mentioned there is no one-stop super shop of where to just go to start your business. Some places, I won't mention names of companies, but kind of advertise themselves as that. But let's go into the formation conversation here. So, what are the basics of why even have a company? Is it just to look legit, or are there advantages to it? Like, why have an entity in general? Like, before we get into LLC versus corporate or whatever.
Sure. As you mentioned, that, as I jokingly said, there's no business startup store. And what we have a tendency to do is, most people by default maybe have some type of an accountant, unless they're doing their own taxes on software. So by default, we're going to the accountant, right?
Mm-hmm.
And they're going to look at your explanation of what you're doing and decide if you're making any kind of profitability. If you do, they're going to make a recommendation to some type of entity that might save you some taxes. If not, they're going to suggest keep it simple. We all like to hear keep it simple, be a sole proprietorship, maybe file a DBA, doing business as, do business in your own name, and then perhaps come back to me a year later. Let's take a look at how the year ended up. Do you just have losses that were going to offset your earned income from your W-2 wages? Or do you have some profitability that should be a different structure? So that's commonly what you hear. Some of the other factors that probably the biggest factor in business that people don't think about that really impacts you financially is, and it's an area I've studied deeply, is the balance between personal and business credit. So when you start a business, 99.9% of people, they don't have investors. You are financing it yourself through your own capital, which means you're using your credit cards typically, if you don't have money saved up, to start the business, to get it launched. Nothing wrong with that. That's 99.9% of people start that way, right? And so when you do business in your own name, very common, especially if you're at the testing phase, you're going to be, using your credit card to finance things, which raises the revolving debt, which is 30% of your personal credit score or so, and it lowers your credit score a little bit. And then you're going to start moving forward. And as you have success at some point in the future, within the first year, you might be saying, maybe I'll form an LLC now. Then you might want to go get a simple business credit card, which is, there's no history in the LLC, so it's based upon your personal credit. And that debt is out of your personal credit bureau. So when that happens, you might be rejected because your revolving debt is too high, which drove down your credit score during that first year of operation. So from a pure financing point of view, forming a legal entity sooner than later for most of you who are getting started might be a better idea, even though the accountant would say it's unnecessary, because they've seen a lot of people in your space or doing something similar. They do returns. They maybe have a lot of losses and they make a different recommendation. So financing is one area to look at. Another area, you kind of mentioned it, or kind of, is it just because it looks better? Well, and from some standpoint, the reason from a psychological viewpoint, we start off as a sole proprietorship once we get past the testing phase is we're unsure how things are going to go. If you knew for certain you were going to be successful, you would form a company moving forward. Now, it might be a cost situation, but customers know that too. If you're working with somebody as a sole proprietorship, if you see that they're an LLC or an Inc. or a company, from a marketing point of view, some people conclude maybe they're a bigger company, maybe they're a bigger brand. So some people make purchasing decisions that way, or who they feel comfortable working with. So those are a couple of factors. Obviously, liability is a big factor. We know now that Amazon, insurance is required for e-commerce sellers once they get above 10,000 a month in sales. So if you're 19 and you have no assets and no real exposure, you might say that's not a big deal for me. Some people forget they have parents or grandparents in a state and things passing on asset value. And so having a separate legal entity to provide a separate layer of liability protection besides branding, financing, potentially tax savings are some other reasons that people maybe sooner than later should consider forming some type of legal structure moving forward.
Got it. So what are the different types of legal structures?
So we'll put in two main buckets. You think of a corporation, a regular corporation. We have a S and C corporation. They're kind of the opposite. The C corp retains earnings and profits, and the S corp, they flow through to a personal tax return. Then we have this LLC, and the LLC, probably 95% of people are setting up LLCs over corporations. But there's the biggest misconceptions because people don't know an LLC can be taxed 4 different ways. It could be a single member disregarded, 2 members taxed as a partnership, and that could be husband and wife, or partners as spouses. That could be also taxed as an S or C corp. So there's 4 different ways that an LLC can be taxed. There's a couple other steps to do to make sure it's done properly. So these are most common types of entities that you might form. Of course, if you're in a different country, that's, UK is a UK limited company, Australia is a priority limited company. So whatever company you would have in your jurisdiction, in most countries around the world, they're similar to either a corporation where it's taxed at the corporate levels, or it's a flow through entity like a single member LLC disregard is very common. In the US, we have a couple other options.
So just to help explain to folks who maybe aren't familiar, you use the term disregarded. And for those of us who are operating as a sole member LLC, meaning I'm the one owner, what does that mean?
So that means if, by default, if you have a single member LLC and you didn't decide to have it taxed as a S or C corporation, it's disregarded, meaning the profit and losses flow through to the owner. Now, 95% of the time, the owner is you individually, right? So then that means that profit would flow through. And assuming, let's say it's an e-commerce business with earned income, that would flow through on what's called Schedule C, which is the same return as being a sole proprietorship. So single member LLC disregarded typically would flow to the owner. Now, could the owner be another entity? It certainly could be, but to keep it simple, let's assume the owner is the individual. So that's the most common, even going to the CPAs we talked about. It could be, oh, maybe you don't have profits, but you're concerned about liability because you're selling products. So the CPA would likely recommend a single member LLC disregarded for liability protection. Yet the profits will still show up on your personal tax return on Schedule C, which keeps the accounting and taxation very simple. So that's a common approach that people start off with also.
Got it. Okay. So essentially, you have different ways you could structure it, and you can kind of restructure it over time. Like my accountant over time, I have a couple different companies. Not to get too deep in the weeds on my formation, but one of them we eventually created into an S corp. So you have the ability to do those things over time. So you're not totally locked in. But one of the things that I just enjoy every year is the state of Florida sends me a notice of basically I get to give them more money every year just for the formation of the company. And there's just seems like there's other little things you just kind of have to do to maintain the company. What are some of these formalities? And what if someone says, I won't get to that. I set the whole thing up. I already got my name as such and such LLC.
Yeah, you brought up a good point is, there's the setting up the entity and you have an annual state requirement, right? So that's one you don't really want to ignore. And the state fees can vary from Florida 125 to California has an extra $800 a year annual franchise tax fee. So some states are very different, right? And so those you don't want to ignore because eventually you go into some kind of default status and some kind of revoke status. And if you're in some kind of a revoke status, you basically have no liability protection. And so some people, time will go by and that could be a real issue. So that's the minimum is the state requirements. And then there'll be what's called a registered agent. And if you live in Florida like you do in your home state, you could be your own registered agent. That means if the company was ever sued, somebody has to accept service of process on behalf of the company. And a lot of companies like ours provide a service to do that for someone. So that's another step. But the one that most people forget that they kind of ignore because they really form an LLC for branding, liability, or taxes. And they if they do get sued, they're like, well, I got insurance. But when you really form an entity, it's a separate legal entity and it has what are called formalities. And if you don't do these formalities, and the company was sued, the insurance says, we're not going to cover this part. And they want to sue your company and they know you have, 4 rental properties in your own name, free and clear. And they do an asset search and they want to go through the LLC after you individually. That's called piercing the entity veil. And if you don't do formalities like minutes, meetings, resolutions, and things of that nature, or if it was undercapitalized, you only put in $100 and your state says maybe you should put in $1,000 or 1,500 or 2,000 to get it started. And you look at a combination of these things, there's been cases where they can go through the LLC after you personally. Most common would be you sign a contract in your name personally, and you forget to put your LLC title as a manager or member. So
Mm.
these things can happen. And a lot of people, believe that LLCs are simpler than corporations. They don't have the same formalities. And I'm not a fan of everything I read. So I what I did for years, Kevin, is I would hire attorneys, and I had this one particular attorney for many years that I would hire him just to do research. And we would look at court cases because I was taught by attorneys that you want to say, what does the local judge say at your state level, or if it's a federal case, mostly at a state level. And what we found was a lot of judges were, when it came to piercing an LLC veil, would say, these are, fairly new entities. Why don't we just look at the same court cases for corporations? Did they do any formalities? And did they have capitalization? Did they commingle funds? Meaning, when you went to Costco, you pulled out your business credit card for personal stuff, because instead of your personal credit card to pay for personal stuff. And if you did a lot of that, that could be a real issue in what's called protecting the entity veil. So a lot of people are in a very vulnerable situation if there was a real lawsuit. And of course, we know most people aren't really going to suffer a real significant lawsuit, but they would find that they really have no protection. And a lot of people, let's be honest, never did the correct operating agreement, didn't do any of these formalities. They just formed the LLC, tax ID number, opened a bank account, and away they go. So there are some things that, if you want to make sure you're protected, you start with a complete formation. You do some of these annual requirements. And I know it sounds kind of crazy, like, hey, I'm a single member LLC, it's just me. Am I really going to have a meeting with myself?
Right.
I'm not
I
totally
met
crazy.
with myself to say, this is what
Yeah,
I'm doing.
yeah. Myself approved this at the stoplight to keep
Yes.
moving forward. So, you're not crazy or nuts, but at the end of the day, it's a separate legal entity. And so we forget those things. So those are some basic things that would come into play that, again, are most people going to look at? No, but as your brand grows, having your ducks in a row, because you can't do these things at the last minute, because let's be honest, the attorney and judges are not, they know when people date documents and try to backdate things, and there's a proper way to do it, but they know that people are going to miss out on some of these things. So if you can get it all done, simply from the start, that's ideal, and maintain it annually, that would be a big help.
So, I mean, like, what would you suggest, like, on an annual basis, any particular time of
Yeah,
year? Just jot down, I had a meeting, because as you're writing this out, that's your meeting. I had a meeting on
yeah,
X date to talk about, we're going, not we, XYZ LLC will continue to sell on Amazon.com. Like, something
yeah,
as simple as
exactly.
that.
Yeah, you would have some basic annual minutes and meetings that we continue to move forward in the business. We're in the same niche, or did we add another niche, or we're looking to expand in this area? We leased a new office space, or we had a new office, or something simple. And so there's some basic things to at least do on an annual basis. Like when we do resolutions, we give you like 70 different types of resolutions that have fill in the blanks, and the title is very clear. And somebody asks, when do I do this? Well, just look at the title. And if you've ever done something that remotely looks like the title, maybe fill it out and put it in your record book.
Hmm.
And so, I mean, can you have your annual meeting in a better location than your hometown? If you do it consistently, you could do that. So there's some things, and these things depend upon who your accountant is, and what do they like to write off, not write off, and how do they feel comfortable with it. But there's some basic formalities that should be done on an annual basis. Most folks in their Amazon business aren't making that many major changes. And it's not like you have to list, oh, here's the 42 SKUs I added this year. So that's not necessary.
Right. You don't have to say, like, I meant to change the title or to
Yeah.
bid on a different keyword or something
Yeah.
like
Yeah.
that.
Exactly. That's
That might be
too
too
granular.
much.
Yeah.
Yes.
Exactly. Yeah.
Got it. So it's basically that you're operating an e-commerce business on Amazon.com, for example,
Yeah.
as opposed to, we decided to, start constructing homes.
Yeah, that, or even maybe you expanded to Walmart or
Right.
open a Shopify store. That could be something significant or something, or opened up new accounts under the same LLC. Even that might be too granular, but a little bit more detail is never a problem. But do something that's basic so it's there for yourself as you move forward.
And then would you sign this?
Yeah, you would sign as whatever your title. A lot of people don't know LLCs can be managed by a manager or by members. By default, most pick members, which is not our favorite choice because that kind of tells the world who the owner is. So we prefer to be managed by a manager. Not a huge deal if you did it the other way. That's just our preference for flexibility and things of that nature.
Meaning you sign that you are the manager of the LLC as opposed to a member, and the member, of course,
Yeah,
remains
correct. That would
owner.
it would flow into that. So if you formed a single member LLC managed by a member, then of course you're signing it as the member. That's your title. And so that would be the appropriate way how you would do that moving forward. And some people, of course, have more complicated structures where the one LLC is owned by another LLC. Then, sometimes it gets a little more interesting to figure out who's actually signing because who's the owner and all that good stuff. So there's ways to strategize that if you get into a multiple level type situation, which is, when people get into real estate, other asset classes, things of that nature, these things can come into play.
Got it. Okay. Well, we'll get into some of those
Yeah, we'll keep
situations
it
here in a
simple, but
minute.
yeah.
But to keep it somewhat simple with formation, but
Yeah.
complicated a little bit. And I know one question that comes up is someone is in another country. Do they
Yeah.
need to register an entity? What would be the advantages if they set up a US entity?
So, in reference to Amazon, as we all know, they make it very easy for anybody around the world to sell on Amazon.com, for example, or other jurisdictions. At least in the US, it's very easy that you can sell as a foreign individual, foreign entity. You can either fill out a WABN as a foreign individual or WABNE as a foreign entity. So it's not necessary to have a US entity to be on Amazon. Now, when the insurance new guidelines came out last September, and some folks in a high risk category, if you're in the baby niche, exercise equipment, supplements, some found it, even in Australia, the UK, very difficult to get insurance. So then some wanted to go to a US provider, as you mentioned with Matt. So that came into play to have a US entity, and there were some things to do there. That's probably an exception when it refers to Amazon. So it's not necessary to have an LLC or a US company to sell on Amazon. No. Other platforms, Walmart, you get into, do they want a W-9 be filled out, which creates a US taxpayer, which might be looked at more closely and get approved faster than a non-resident? That's a whole different subject. But generally, in regards to Amazon, no, you're fine as a foreign entity or individual.
Got it. So basically, for most folks, they would be fine. Now, one question that does come up, and sometimes this isn't just an international thing, but sometimes even a domestic, is what state do you register in, and what would be some advantages to one state over the other?
Yeah, so in that particular area, we would look at court cases and things that, as I mentioned before, not just the obvious. And a lot of us default by which state has the lowest fees, which isn't the best approach. It's a factor, but maybe not number one of the list of 4 or 5 factors to take a look at. And of course, you have to look at, are you a US resident, which is very different than outside the US, right? So for the US residents listening, they'll see content about form a Wyoming LLC. It has a little more privacy, maybe Delaware, maybe Nevada, and you live in California or you live in New York, 2 of the highest tax states. And we guarantee if you go to your accountant in those states, their assumption is you went to Wyoming or Nevada, for example, to save state taxes. And they're going to say, well, you live here. This is based upon when I mentioned Deloitte and Touche, when we did research, hey, can you, set it up here, but you live here. But if you live in California, New York, running the business, they're going to want you to foreign qualify. So therefore, the default recommendation is you'll get to maybe just form the entity in your home state, which, we do those also. There's an advanced strategy we won't get into in the moment, but generally, most people in the US by default are going to look at their home state. Maybe if they're moving to another state, within 3 months, 6 months, we get people from California. I mean, people in California are leaving by the busloads coming to Vegas, right? Where we live. So when that happens, and and we talk to somebody like, oh, when are you leaving? Oh, in 4 weeks. Well, we should just form a Nevada company. You're coming here anyways, and you're leaving. We're not going to form in California and try to move it after. So that's an exception. But in general, we'll have that. If you're outside the United States, it's different. Now you can pick and choose, right? So you can pick and choose which state, if I need an entity for a situation, or maybe it's a separate partnership you're doing, maybe it's something on Shopify, or Walmart. Then it comes down to liability, asset value, what's your risk tolerance, is privacy, how important is that? These are some of the factors we look at to determine, are you the rare case where you're going to have investors? Do they want to look more at a Delaware type company because you work with a securities attorney? I know that's really rare. So generally we start non-residents, we look at Nevada versus Wyoming, and in our training we look at some court cases, and of course we list the state fee differences, and we say, is this extra fee worth these benefits, or do you want to go this way? Then we can help you either way. So that's kind of how we walk people through that decision process. But it's very different for US residents and non-US residents, and don't be surprised if your accountant says one thing and why they're saying that and what are they motivated by. And then on contrary, just on a side note, in the crypto niche, which we do some work, we get a lot of people, attorneys that, let's just do a Wyoming LLC even for non-residents. And I have to bring up this Deloitte conversation because we get into different, they're not focused on taxation of the resident, yes. Right? So that
everyone has their angle they're looking
at. Exactly. So you have to kind of look at that part. And at the end of the day, let's be honest, your accountant's one probably signing the return if you have one, or yourself. And so usually whatever you're doing, you have to get them typically on board is a really good idea.
Got it. Now, one thing just to mention here is, I probably should have said at the beginning, we're not providing any tax or legal advice
correct.
Here. This is all more for educational, really, so you can ask the right questions. But one of the things I've learned, especially to the tax folks, even if you pay a tax attorney, oftentimes they're still going to use some kind of separation language you may want to consider. It's possible that it's never you do this. There's always this kind of qualifier statement at the beginning that softens everything they say. So as the business owner, you just have to be the one to make the final decision and live with it. And that's part of being a business owner, but just educate yourself as much as possible. Now, one question I have too, because you had mentioned like people coming from different angles, and Wyoming and Nevada come up. I don't fully understand. I kind of have an idea, but if you ever talk to someone or meet someone at a conference who maybe they engage in a little bit more kind of risky behavior. When I say risky, I mean more like Amazon's terms of service, where you hear that there's certain law firms that are registered agents that Amazon might suspend your account just because they find that you're with a particular company, because maybe everything's shady with that. For whatever reason, this kind of like dark gray, black hat-y world seems to gravitate towards Nevada and Wyoming. Why is that?
Well, there's a couple of reasons. I think anytime you mention the word privacy, which is a little bit more associated to Wyoming than Nevada, and I've done a lot of research on how do you undo privacy. I had a client after 2008 that came to me that lost $500 million in real estate after 2008. And they said, our name is mud. We owe banks millions. We can't be on any structures, any entities. How do we set this up so we can move forward? We have a new group of investors, but we want to be more anonymous. Now, so some of these things come into play, and generally we're not attempting to attract that type of crowd, right? But what I usually find, like we got an email the other day, somebody was attempted to do drop shipping on Amazon, which is, they got suspended. of course, and then they reached out to us and they want to form a new entity. And they probably, most of the times, what happens, Kevin, is people took shortcuts. They weren't in a position to do it correctly, whether it's financially, personally, a relationship thing. Usually there's some other, like privacy to me is like going to confession. Okay, what's the real reason? Okay, I'm getting divorced.
Yes.
I'm moving out of state. Here's what's really going on. Okay, now we can, so usually I find it's something like that, or they just got kind of bad information typically. And now they're kind of reverse engineering. Rarely is it someone that, hey, I got 100 million of assets. I don't like people having their nose in my business, and I want a little bit more level of privacy. Now, I know in Amazon, it's more of a marketing approach. Like, I don't want somebody to reverse engineer what products I'm selling. So I get that a little bit. But the high end asset protection, they're going to big law firms, big asset protection firms. They're not going to go file an entity online by themselves or go find a company to do it. So usually it's people that got themselves in a situation. I mean, it's usually, privacy is usually divorce, non-compete, child support, some type of legal issue. Those are the most common. Or they're trying to compete against somebody they already have a partnership with, or the company they're working at doesn't allow them, and they're over here saying, I want to do this, but I can't know about it. How do I do it so my name doesn't show up? So those things come into play. And we I don't want to assume everybody's like that, because a lot of people, they just read some blog post that says this is more private, you should have privacy. Okay, I'll just do that. So
Right.
I don't like generalizations, but those are a couple things that come up.
Well, and that's a fair point. And I think some people, it's like, you get a VPN because
Yeah.
like to basically kind of hide your IP address.
Yeah.
The more you go down the rabbit hole of like a VPN, you realize you're really not all that private. People will still figure out who you are, what you're doing,
Sure.
even if you're trying to hide your IP address from Amazon, or just in general, you don't want your cable company to know what sites you're going to or whatever, just because you're trying to be private.
Sure.
And some people are just by nature private, but
Yeah.
I generally like to look at it and just take a step back. Everything will see the light of day at some point.
Yeah.
And so always just assume whatever you're doing is going to see the light of day. And so
I agree.
are you just trying to create a little bit of, just trying to, so not as much attention around the corner, or are you genuinely trying to like hide everything? And then the hiding aspect, why are you trying to hide it? Is because you read a blog post, and I think I've been guilty of this. I read a blog post and you hear some creative thing and you're like, that just sounds so cool, and then like you think about it a day later, like, what's the point?
Yeah. I had one really famous attorney in Florida that I worked with for many years. He passed away about 10 years ago. And he said, Scott, number one, if you have any significant assets, you want asset protection first. Some proper structures, formalities, maybe multiple buckets. The more net worth you develop, you're not going to put all your eggs in one basket, just like you're not going to put all your stock in one stock, even if it was Tesla or Amazon, you thought it was going to do really well. So he said, privacy is like the icing on the cake. If you can sprinkle a little bit here and there as you need it, typically, in other areas, that's great. But don't only rely upon privacy, because you got to assume if you go to court and they subpoena records and say, okay, you say you're not the owner, but we see a transaction from your account to this LLC account. So was that a loan? Was that income? Or was that capitalization? Well, we subpoenaed your accounting records, and it appears on the balance sheet, it looks like capitalization. So you just committed perjury because you said you weren't the owner. So he was very good at assume what could go wrong will go wrong. You have to reverse engineer these things, and most people don't think through it. So I agree with what you're saying is you want to have, your business, your goal is to focus on profits. Paying as much taxes as possible is going to be good news. Have some type of balance as a structure and move forward in life. And I think nothing wrong with protecting your information and some of those things, but I think you got to move forward and focus on profitability and growing your business.
Exactly. And not get too wrapped up in a cat and mouse game and stuff like that. So
sure.
So anyway, this was a helpful discussion just in general about formations. And, for some people, they probably picked up a golden nugget or two or here or there. Others, maybe this was like, oh, maybe I need to go set up a formation. So if anybody had questions or wanted to learn more, where would they go?
The best thing is to send an email to our team. It's support@launchwithconfidence.com. That's one of the options, support@launchwithconfidence.com. Or you can go to that website, launchwithconfidence.com, and schedule a free discovery call. And you'll basically describe your situation. What do you want to accomplish? And we'll let you know, A, can we help you out or not? If we can't help you out, do we have someone who would be a better fit? And if we can help you out, here's what that looks like as far as fees. So, for example, a lot of people, Kevin, have like a strategy question. How do I do this or fix that or do that? And usually that falls under a strategy call, which we apply as a full credit towards any services we do in the future. We also do a lot of sales tax registrations for those who are on their own website, Shopify, that cross, economic nexus thresholds. So that comes into play. So those are the two best options. Send us an email or go to the website and book a free discovery call.
Awesome. Well, this was an interesting discussion. So thanks so much, Scott.
Yeah, thanks, Kevin. Appreciate you having me.